Well, hey there, it's Terry Sawchuk. It's Thursday, so that means it's time for 3 Minute Thursdays. Want to start out by saying happy Memorial Day weekend. I hope you all have an opportunity to spend time with friends and family and do some fun stuff. As far as the outlook today, I'm going to go over a couple things that I think are interesting. Before I get to that, we're holding a town hall meeting next Thursday. It'll be either 6:30 or 7 o'clock. I'm not sure which, but keep an eye out on your in your email box, because we've already sent one invitation and we'll send a couple of reminders next week. But Thursday, the 30th, is the day that we are going to do a more comprehensive town hall meeting. So with that said, let's get to today's business. What's interesting to me is that the 10-year Treasury here has really started to bounce off of this low point, which was, if you take the wicks out, roughly 4.35%. And today it's back up to almost 4.5%. And this big candle here is an indication that the market is reacting to some, I'd say, hawkish commentary from the Fed. I mean, basically, beginning of the year, the market had priced in what amounts to 7 rate cuts this year. And that's been whittled all the way down to 1 or 2 rate cuts. And we might not even get those. The commentary from the Fed yesterday is that it's a bureaucratic process, basically that in order for us to do this, we have to see a meaningful rise in unemployment or a meaningful decline in the stock market. And I'm paraphrasing a little bit, but essentially that's what they've said. So, it just doesn't look like the Fed is really going to be super accommodative. But again, the Fed has accomplished way more with their words than they have with their actions so far this year. So we'll see how this all plays out. From a political standpoint, it's pretty obvious that inflation is becoming a political hot potato, and they want to address that, which is why I think Janet Yellen is playing the bad cop right now and being a little bit more assertive on that front. What does this mean for stocks? Well, overnight, NVIDIA reported blockbuster earnings, and this is all kind of tied to the AI craze. But what's interesting to me is that in spite, and I'll jump down here and show you NVIDIA. Okay, so NVIDIA, you can see just had a gap up and took off overnight, and that's because it's up 10% today because their earnings were crazy good. But what's more interesting to me is that the NASDAQ kind of opened up and shot out of the gate, but has since given back some of those gains. The S&P 500 was up as high as 45 points today. So this is telling me that in the grander scheme of things, I think interest rates and monetary policy are going to be more important than some of these blockbuster earnings, which, by the way, were reported for things that have already happened, not things that are likely to happen in the future. They did increase guidance at NVIDIA, so they're definitely bullish. But, outside of the AI industry, everything else looks to be cooling off, with the exception of Europe. And this is why we've added more European exposure to our portfolios. And we think in the short to intermediate term anyway, Europe offers a much better risk return potential. And that's why our portfolios are reflecting that right now. So that's going to wrap up this week's edition of 3 Minute Thursday. Appreciate you listening. Look forward to our town hall meeting next Thursday. So I will not be doing a 3 Minute Thursday because we're doing a giant town hall. Look forward to seeing you there. Have a great weekend.